Good morning to you, and thank you so much for watching NTV Turning On Your World. Now, this morning we're going to be turning on your world in regards to information you need to have at your fingertips, especially if you are a depositor interacting with any financial institution here in Uganda, and therefore the Deposit Protection Fund talk show is upon you from right now 11 a.m. all the way to midday. The theme for this discussion this morning is going to look into deposit insurance and the mandate of the DPF. And of course, at the end of the day, many of us, most of us, have been encouraged over the years to belong to financial institutions. One, because they say that our money will be secure, but what happens in the event that the financial institution has to close? Will your money be secure? Well, Bank of Uganda recently did close the EFC Uganda Limited, and as we speak, most of the depositors have been paid up to 10 million Ugandan shillings by the Deposit Protection Fund. Now, today's talk show is going to be focusing on three main things. The first thing that we want to focus on is an explainer on the role of the Deposit Protection Fund. The other thing that we want to explain to you is also the need for you to know how to save your hard-earned money and the things that you need to do, the nitty-gritties of how to follow up on your hard-earned money, on how not to leave the protection only to your banker or to your financial institutions, but yourself. Take the responsibility of protecting your hard-earned money. And the other thing that we hope you take away from this is that your role in ensuring that you are paid fast in the unlikely event that your bank is closed. Now, that fast is not the FIRST number one. No, this is fast, meaning the quickest way possible. Therefore, to address these and other questions that I know that you do have, we do have our guests in studio who are directly from the Deposit Protection Fund. We do have the Chief Executive Officer, and that is Dr. Julia Claire Olima Oyet, who's a wonderful Mrs. Good morning to you.
Good morning, viewers, and thank you for tuning in.
When we also have the Director for Communication still with the Deposit Protection Fund, and that is Mr. Patrick Ezaga. Good morning to you.
Good morning, Priscilla. Good morning, viewers. It's a pleasure to be here.
Okay. All right. Well, now these are definitely coming from the fund, and they are the right people to ask all the tough questions. Now, for your questions, turn to our social media platforms, engage in this discussion on YouTube as well as Facebook. We are streaming live, and you can drop in as many questions as possible because they are here to rectify and also share as much information as possible so that you can make an informed decision. Of course, the first question would be, what is the Deposit Protection Fund of Uganda? And I'll start with the CEO in that regard. Dr. Julia?
Okay, thank you very much, Priscilla, and thank you again for hosting us. The Deposit Protection Fund is an agency of the government of Uganda that was put in place in 2016 and started its operations in 2017. So the Deposit Protection Fund comes in to pay you up to 10 million shillings in that unlikely event that your financial institution, where you put your hard-earned money, as you have explained, is closed by the Bank of Uganda. That is basically what the Deposit Protection Fund is, protecting your deposits to ensure that if your institution is closed, you don't go away with nothing. At least you receive up to 10 million. And the balance, if you have more than the 10 million, you'll wait for the liquidation process, and then you will get that money also.
Okay, all right. And what's the contribution or the mandate beyond that for the fund?
So beyond giving that protection, the fund also does a lot of public awareness to the public, and that is what we're doing now, for them to understand that they should deposit their money in institutions that are regulated. And if they deposit their money in institutions that are regulated and supervised by the Bank of Uganda, they can be able to benefit from the protection that the DPF gives. Okay. So that is what is important about the role that the DPF plays. And in that process, we want the public to be confident and to bank with confidence, and also not to listen to rumors about banks that people say are going to get closed, because most times those are false rumors, and to let them know that in that event that their bank is closed, they will still be paid.
Okay, so for example, in the case of EFC Uganda Limited, upon its route to closure, the Bank of Uganda being part of that process, does notify you that this is going to happen. And so it begs the question, at what time does the fund come in to start helping people process for their funds to be, given back to them?
Okay, so when EFC Bank was operational, customers, if they had any complaints, would go to EFC Bank or go to the Bank of Uganda. So the DPF comes in only after the bank has been closed. And once the Bank of Uganda informs us that they're closing the bank, we get ready. And that is when we now look at our records, look at the depositors who have given us their information. We have been talking about the need to have the national IDs. We look at that number, we verify it with NIRA. We look at your alternative mode of payment. If you gave us a mobile money number or you gave us an alternative bank account, we verify that so that we can be able to pay you as fast as possible. And indeed, when EFC Bank was closed, we were able to start paying depositors within 8 days of closure of that institution. And that was a big difference compared to previously, when it would take more than 6 months to start paying depositors. But in order to have that to be effective, we needed to rely on information from the depositors themselves.
Okay, so in regards to the EFC Uganda Limited, how many depositors have you cleared so far?
Yes, so we've paid 76%, almost 80% of the depositors, and now we are looking out for the remaining group of depositors that didn't give us information. So very important for the public to know is update your information with your financial institution so that you can benefit from the protection that the DPF gives in a very swift manner.
Okay. You have talked about information, and perhaps they're watching right now and they don't know what information you're looking for. So as the Deposit Protection Fund, what information are you looking for from these previous customers of EFC?
Okay, so if you're a depositor and you have an individual account, like Julia Oyet, I have an account that is Julia Oyet, it's important that you give your financial institution your national ID and national ID number, and also give your institution your mobile money number or any other number that you think can be used to reach you and to pay you. If your company, you have to give the your financial institution the registration number that you got from URBS or any other ambit of government that registered your company, and then also give us an alternative mode of payment so that in case your bank was closed, we can easily use your alternative bank account in a different bank. Mainly it is about giving the bank information that helps us to identify you and to be able to pay you. Yes, depending on your structure.
All right.
Yes.
And so where would they bring this information? Because the other side is closed. So how do they then pass on the information to then get the necessary monies reverted to them?
Yes, so this is an ongoing exercise. Since 2019, we've been asking the public to update the information. This information has to be continuously given to your financial institution. Where you have changes maybe in your mobile money number, let your financial institution know. Just live every day knowing that if my bank was closed, the institution has all the information they need to be able to pay, because we don't know when that event can happen. We are all hoping that it doesn't happen, but if it happens, you will be got at the right side and you will not suffer like those depositors who might not have updated their information. So it's a continuous daily process.
Okay.
Yeah.
All right. So that definitely puts a serious mandate on the citizens of Uganda participating actively in financial institutions to have as much information shared on a daily basis, update it as much as possible. Now, speaking of updates, Mr. Ezaga would like to get a better understanding of an update and information regarding the Deposit Protection Fund in terms of why should a citizen be interested in knowing what the fund does.
Thank you very much. I think the starting point has been alluded to already, that the financial sector as it is one that is evolving all the time. Things happen. And citizens primarily need to be interested in knowing about the DPF because of the key role it plays. In many ways, the DPF contributes to confidence in the financial system. And therefore, for the citizens to know and have confidence in the financial system, they need to be aware of government called the Deposit Protection Fund of Uganda that was primarily to serve that purpose. You know, government works in specialized ways, and therefore this being a specialized area in the sector of finances, we think it is important that depositors across the length and breadth of this country need to be aware that there is actually a properly established agency of government that handles that aspect. The other thing, as I mentioned, is it is very important because a civil society that is developed, the citizenry, need to be aware of what is happening in their country. And as my CEO has mentioned, we are aware that DPF is still a growing institution, and not very many people know what it is and what it does. And that's why our public awareness efforts are being enhanced so that we enable the citizens to know. It is one thing to ask of the citizens to know about DPF, but it is also another thing on our part to give them the platforms through which they get to hear about DPF, ask about the Deposit Protection Fund. Yeah.
Okay. Dr. Julia, in that regard, of course, with the case that we have spoken of earlier of EFC Uganda Limited, but any bank, as you had mentioned earlier, could face this same catastrophe, and its customers then also face the same. And so it begs the question, in case a bank closes, how is the fund protecting people's money, and who is protected? Because every other day banks are being innovative with accounts and nature of accounts. You do have a private account, there's a company account, it could be a group or SACCO account and things like that. So when it comes to protection of those funds, who is protected and who's not protected?
Okay, so to benefit from the protection that the Deposit Protection Fund gives, you have to bank your money in an institution that is licensed and regulated by the Bank of Uganda. So before you interact with any financial institution, look out for the license in their banking hall. Okay. And also go to the website.
On that note, is it limited to banks? We call them supervised financial institutions. So you'll have the banks, you'll have the credit institutions, and you'll have the deposit-taking microfinance institutions. Now, if you go to the website of the Deposit Protection Fund, you'll see the financial institutions that the Deposit Protection Fund works with or that contribute to the Deposit Protection Fund. So if you, as a depositor, you want to benefit from the protection that we give, look on our website and ensure that you're dealing with those financial institutions. The other question that you asked about, how do I benefit from the protection? So if you're an individual, now like Priscilla, and you're in a particular bank and you have 5 different accounts, we amalgamate, add all those accounts and check to see if they add up to the 10 million. If all your accounts, for example, add up to 9 million, then we'll pay you 9 million. If all your accounts add up to maybe 15 million, we'll pay you 10 million. And then the 5 million, you'll wait for the liquidation process, and depending on the proceeds, you'll get the balance. Now, individual accounts are different from company accounts. They're also different from trust accounts, and they're different from joint accounts. So if, Priscilla, you have an account, and then me and you have a different account that is a joint account. On that joint account, you are protected up to 10 million, and also on your personal account, you're protected up to 10 million. So we give the protection per batch, depending on the nature of account that you have. Individual, joint, company, or trust accounts, those are all treated differently. All right. So upon those, the 76% that you talked about, whose information was readily available, what's the procedure of then getting that money back?
Okay. So we use different mechanisms. For the depositors who had monies of 500,000 and below, we paid them through mobile money. So those depositors didn't have to walk anywhere. They received their money on their mobile money wallet. So we used Airtel and MTN. Then we had the depositors who had 500,000 and above, who we asked to go to Stanbic Bank, because Stanbic Bank was our agent bank. All they had to do was to make sure they go with the information that helps the bank to identify them, which would mean their national ID, a genuine, the original national ID, and Stanbic Bank would also confirm that that is the right ID, log into the NIRA database and confirm, and they would be paid. That is for the individuals. And then for the companies, we ask them to come to the Deposit Protection Fund, because the companies have a whole set of documentation that we have to look at to confirm that that's the right company, those are the right signatories, that's the right person whom we're supposed to pay. So it was, maybe I can say 3 or 4 pronged. So we paid through Airtel, we paid through MTN, we paid through Stanbic, and also we paid through the DPF using the normal EFT payment processes.
Mr. Zaga, does the role that the fund plays stop at, giving them that deposit that they are mandated to get in case a contributing institution does close down, or does it stretch all through the process that Dr. Julia mentioned here of liquidation?
Primarily, let me start off by saying that the concept of deposit insurance globally focuses on what we call the less sophisticated. Somebody else, the economists would say bottom of pyramid, whichever way you want to call them. And that's because, when the financial institution goes down, the net impact on that category of people is way higher. Many of them have a single account in one account. Maybe not Priscilla, not Patrick, you're multi-banked, you're educated, you can, read and monitor. So, because of that primary focus of the concept of deposit insurance, our mandate as established primarily stops at about the 10 million shillings. Now, the process of liquidation is taken over by the central bank. Although the law also mandates the DPF, if so appointed by the central bank, to be a liquidator, and we're developing that capacity. So if the central bank feels that, all right, this financial institution has gone down, and beyond paying the 10 million shillings, DPF, please take over the liquidation process, we will come in and perform that role as well. So that is determined based on the circumstances and at the discretion of the regulatory body. Yeah.
Okay, let's talk about the instance whereby you do have a contributing institution closing down, but it had branches that are far and deep in the country. How do you handle that?
First off, it doesn't matter the location of the branches. All these financial institutions keep records of their customers centrally.
Okay.
And this is information that is shared with us. The NIMs and the alternative mode of payment, generally the information about a depositor is kept. And now with technology, it doesn't matter the physical location, at least in terms of depositor records, we would be able to easily access that. I think the next phase that would become important then is, that's where I come in from a communications perspective, because some of those who may be physically in those far off places like you're talking about, it's usually about how to get information to them fast enough. In fact, we actually think some of the EFC depositors that may not have been paid to this day, it could be a result of the difficulty of accessing information, and that's why we are traversing the country to ensure that depositors, irrespective of where they're located, they get this information, they get to update their records, so that in the unlikely event that anything were to go wrong, it is easy for us to reach to them. Okay. So it's really a dual approach.
All right. Yeah. In the unlikely event that someone is passed, but they've been having an account at the time of closing, how do you handle that?
It's a standard procedure. Everyone has a next of kin or somebody whom you have registered. And so if in the unlikely event that I passed on, then my next of kin would then, following the bereavement and so on, you follow through the processes and they get the necessary letters of administration, proof of death, and so on and so forth. And then the beneficiaries will then trigger that process.
Okay.
Yeah.
All right.
Maybe Priscilla, just before we go into probably the next question that you might have, it was a good question that you asked about. We have banks that have branches all over the country, and if a bank was to fail, how would we reach? And Patrick is right. We can use lots of technology that is there, but also when we're choosing our agent bank, we choose carefully. We choose an agent bank that has a lot of branches across the country, and now we're actually working on a platform so that we can be able to pay our depositors from any of the branches of our agent banks. That is work in process, and definitely we're going to make it more convenient for the depositors.
Okay.
Yeah.
Well, thank you so much for that clarity. Mr. Zaga, still on the issue of the accounts and their natures in these different banking institutions, from individual to joint, and so if I have an individual account and then there's an account, a joint account for which I am a signatory, when you are making these payments out, do you start with individual accounts, then pay out the next type of accounts, or it's really general, it does not matter?
I think the straight answer to that is that we pay per depositor. Okay, so if Priscilla has an account, you are a depositor. If there is an account called Priscilla and Ezaga account, that in the eye of the financial institution is one depositor. Okay. So it doesn't matter. Usually it's about the scheduling. As is already mentioned, in the case of EFC, we broke them down into mobile money payments, and then we went to the next tier, individual accounts. It was just to also ensure an orderly process, and we were disseminating information and calling upon depositors so that we ensure that the process is seamless. If you don't do that, then you'll have so many people crowding in at the same time, and you know what that can lead to? Long lines, and then frustration starts setting in. So our interest was to ensure that these are already distressed people. The financial institution has closed. Chances are the depositor is quite distressed. You don't want to add any distress on them. Let them access what is rightly theirs in as easy a manner as it possible.
Okay.
Yeah.
Dr. Julia, currently there's a competition going on within the banking institutions of giving out loans, unsecured loans to be exact. And so it begs my next question. In the unlikely event that my banking institution is closing and I have a loan that is running, how do you handle that, and how am I protected as a depositor?
So you're right to say there's a lot of competition, and it's also important that as we're getting those loans, we analyze and make sure that we're not getting loans just for the sake of getting, that those loans are helping us to improve on our quality of life and we're able to pay back. But back to your question, if you have a loan, we would offset the loan from your deposit and pay you less. So for example, if you had a deposit of maybe 9 million and then you had a loan of, let's say, 4 million, we would not pay you all the 9 million, we would pay you only 5 million. So we offset that loan, and it helps you because you would have paid the loan. So if you had a loan which was bigger, that means that first of all, we would not pay you, and the liquidator would be looking for you to make sure that you pay back that loan. So if your loan is smaller and is within our deposit insurance limit, we would just offset. That makes it easy for you, don't have to pay. But if it was bigger, you'll still have to pay to the liquidator, and that's why getting loans, you have to be very careful. And no one should think that when the bank is closed, the loan has also died. No, the liquidator will still follow you up to pay that loan.
Mr. Zaga, is there something you want to add to that loan issue? Because it can be very pressurizing. You have been having a system and you're trying to pay in an understanding that you and your banker have or your financial institution have. And so now if it's closed and I'm getting my money back, however, the whole 4 million has to go. That's also some pressure.
Yeah, true that. These are the issues that are being mentioned. First off, we need to emphasize the fact that when you're going out for a loan, clearly understand the implications at the very stage. The challenge is that many times when people are getting loans, it's under pressure. All you're interested in is they tell you sign here and you sign there. You're interested in only that. But it is important for us to underscore and emphasize that one of the reasons that could potentially lead to the collapse of a financial institution is those loans that are not being repaid. Because you and me know that financial institutions operate on your and my money. The depositor's money is what they keep running, and when they give out loans, this is somebody else's money that was passed on to you. So if the financial institution is not recovering the loans the way it should, it could potentially be some of the reasons that can lead to difficulties in terms of liquidity and so on and so forth. And as already mentioned, there could be the perception that this institution is now closed, so I'm now safe. that doesn't arise. One of the primary functions of a liquidator post the closure of an institution is to continue with those recoveries and make sure that the obligations that you had, you at least run them through to the ultimate conclusion.
Okay. Yeah. This falls under the communications docket.
Yes.
On your side is the fund, of course, that's your mandate, to cover up the loan. However, how do you communicate that to the depositor?
We do it in many ways. First off, we work with the financial institutions themselves. We have mechanisms of engaging in terms of information sharing. So all the financial institutions, we share with them information that they are supposed to, because they interact with the staff, I mean with the depositors directly. As DPF, we don't interact with depositors face to face. We work through the financial institutions they're engaged in. So ours is really about following the depositor with information to wherever they are and interesting them into picking up this information and repackaging the information in such a manner that they're interested in picking it. Because, I mean, it has been said, you put something in writing if you want to deny some people some information. So we want to go beyond that and say, even that uncle, that auntie who is probably not very literate, how do we get the message to them? And the best point is usually that customer interface point when they're engaging with the staff, frontline staff in the financial institution in a language they can understand, so they get an opportunity to probe and ask all the questions just to prepare them. And that is intended to enable them not be shocked when things come and you're like, I didn't know, nobody told me. But it's a protracted process. This is an ongoing exercise that we have to sustain.
So you've talked about that interaction between the staff of the closing institute and the depositor. What's the relationship building up between the fund and then the contributing financial institution that is closing in regards to ensuring that they pass on that information to as many people as possible, but in as much detail as possible for the depositor to make a good informed decision?
For us as the Deposit Protection Fund, already, remember I said we have that information supplied to us regularly. Because if Priscilla's telephone number changed this month.
So if I went to my bank right now and changed it, you would receive
Yes, we would receive that information. So we're current with regard to that primary information that needs to be coming. Okay, now the next thing is that every other day a new depositor is coming. Totally green about what is required. That's another cluster of people to be focused on as well. And that's why we have to continue doing this on a continuous basis. And remember that by the time a financial institution is closed, there are no longer any staff of that institution to interface with the depositors. The institution is closed. And that's why we have to ensure that this information is updated and kept current up to the point when the institution gets closed. And that's the information that we shall then pick to work with the bank so appointed as an agent bank for purposes of payout. Because at that material moment now, you can no longer engage with an institution that's already closed anyway. Okay, so our interface point becomes the agent bank that we have engaged to make the payments out.
Okay, still with the Deposit Protection Fund, Mr. Ezaga, in regards to information, we shouldn't be waiting for when these occurrences do appear to have that activation of your duty to the citizens of this country in the financial sector. So it begs the question, currently, how is the fund ensuring that this information is continuously also consumed by the public as you're continuously receiving the public's information?
One of them is what we're doing right now. And to the viewers out there who are on their screens, who have taken this opportunity, I am sure whoever is watching this program has picked some information. So the DPF, we have a very robust communication strategy, multi-channel, and broken down and into the different stratified levels of our depositors. Even the guy who is in the garden right now, these days they have torches which are also radios. And while he's doing his stuff, he's listening to music and power banks and all that. So we are going to repackage ourselves to reach them to wherever they are. So it's really a multi-approach in terms of how do we get the message communicated to them on the first level. But there is also the issue of recall and reminders. People forget and new issues come up. We need to also update our information. So we are practically on the road, consistently ensuring that this information reaches all corners.
Okay, I'm thinking as a depositor from a rural community. Wouldn't I think, and have you faced people who have a mindset challenge of how sure am I that that money is my money, the money that the fund is wanting to repay me back?
From the perspective of somebody in the rural areas?
Yes.
Yes.
Yeah.
So how would they be sure that the money we are going to pay them is their money? I mean, if you have deposited your money in the financial institution, what you have is the statement showing that this is the amount of money you have. From there on, it has entered into a pool. Okay, and it is from that pool that the financial institutions make a contribution to this basket called the DPF, in the anticipation that if anything were to happen, that is the same resource that we'll then use. I think at that level, what would matter to you is, I have my 2 million, have I been paid it back? Yeah.
And maybe just to add that the recent experience with the EFC showed that the customers actually have a very good idea of the amount of money they were expecting, and what we paid was exactly what they were expecting. And where there were differences, we would explain that there's been an offset, and that is why you're getting this. So because we have all this information, at the time the bank is closed, we have the updated position. And the good thing now with a lot of the apps, you can get your statement almost every day. As the transactions are taking place, you get an idea. So we did not have hardly did we have any customer complaining that you're giving me 2 million but I had 10 million and we cannot explain. Yes.
Okay, so you've mentioned one of the discrepancies could be the loan offsetting.
Yes,
Are there any other differences that have presented themselves?
Maybe there could be if someone deposited money and probably the bank has not yet posted that, but the beauty is that when the liquidator takes charge of the bank, they check for all those transactions that are hanging and make sure that they post. So we did not come across that because the liquidator really manages that process very well.
All right.
Yeah.
Dr. Julia, another tough one. Shouldn't the fund be depositing all monies? Why are we limiting ourselves to the 10 million Ugandan shillings? Yes, shouldn't that insurance go beyond the 10 million Ugandan shillings? Because as you see, the government is trying its level best through the parish development model. We're empowering people to make sure that they have money to keep the economy running. Therefore, why are we limiting ourselves to 10 million Ugandan shillings?
10 million. So, like my colleague Patrick said, deposit insurance generally is supposed to protect the majority small and informed depositors, because it assumes that once you have money which is above 10 million, which you would say is now not small, you should be more informed about the financial sector. You should be more informed about the bank in which you're depositing your money. And it comes back to understanding, knowing your bank. And we've been telling the public the same way the banks want to know you, they'll say KYC, give us your KYC documentation. The public also has to start asking for KYB, know your bank information, track the performance of your bank and put your money in a bank that you feel is performing well. Now, assuming that in Uganda we protected all the deposits in the country, we expose our financial sector to a risk called moral hazard, where you'll have bankers coming in and shareholders coming in, get all deposits from the depositors, use it recklessly, the bank is closed, and who will pay the depositors at the end of the day? It will be the government to pay, and that is taxpayers' money. And so the principles are based on the fact that these banks need to contribute money, and from that money we can be able to pay depositors. But if we pay all the depositors, then the depositors also become reckless when they're depositing their money. They don't care about where they're going to deposit their money. And also the managers know that even if this bank runs down, the country will suffer to pay the depositors as we have a way out. And so it's the moral hazard risk that we try to mitigate, and that's why we can't insure all the deposits in the financial sector.
Okay.
Just it may be important for you and the viewers to know, for instance, that at that 10 million, whereas it may sound like, okay, me I have more, we actually cover up to 98% of depositors in the sector. Meaning that the majority of Ugandans, at any one time, the cash they have is 10 million and below. It's actually 3 million or thereabouts. So at the 10 million, which has also been, benchmarked at the regional level to ensure that there is parity across the economies, 98% of depositors are covered. So you're talking about 2% that is above the 10 million.
Yes, and to add on, even within those who have 10 million and below, 94% have less than 1 million. So you can see the 10 million is adequate. And like Patrick has said, it covers the majority, the small depositors. And the 2% need to know their banks. So that they don't, the banks in the country, central bank has generally said the financial sector is strong and vibrant, but you'll not rule out 1 or 2 weak banks. You who has more than the 10 million, don't just bank, know your bank.
Okay, so you have made critical emphasis on know your bank. And when you say know your bank, what would you like the audience and people who transact with financial institutions to have as information critical to their decision making at any one point, be it depositing, taking a loan, or in the unlikely event of the bank closing and they have to then face the fund here to get their money back?
Okay, so every year the Bank of Uganda has made sure that your bank issues its financial statements in the newspapers, and the reason for that is for you, the depositor, to know your bank. So make sure whenever you see those newspaper clips, pick keen interest on your bank and see, is my bank making profits? Are the profits growing? Is it making losses? Are the losses growing? If you don't understand, you can get a colleague who understands financial analysis or can conduct some financial analysis, and they can give you that comfort. So knowing your bank, it's also important to get that information from credible sources. We're not saying know your bank and then listen to TikTok videos about someone who has sat in their room and has decided that bank C is going to close. All of you go and withdraw your money. That is not knowing your bank. Know your bank from credible sources. Go onto the websites of the banks themselves and see their performance. And you can also get in touch with Bank of Uganda or the Deposit Protection Fund if you want to understand better. But mainly, the onus is on you to access that publicly available information to make an informed decision, because this is your hard-earned money and you need to put it in a place that you feel is safest. Yes.
Okay, but we are focusing, of course, on deposit insurance. What other ways can people ensure that their deposits are insured?
What other way?
Yeah, can people, depositors, make sure that their money is insured?
Well, maybe just to, if I can take that on.
Yes.
The first thing that you need to do, the first thing that you need to do is to ensure that your money is protected. Take the decision to move it from wherever it is that you're keeping it into the formal system. Okay? And we have mentioned that there are institutions out there. I'm sure you've heard of stories where people have created fictitious financial institutions, gone into the villages and deceived our poor relatives there and, run away with their money. So, to save yourself from that, first ensure that you move your money to a regulated financial institution. Now, don't just take your money and leave it there. Follow through that money. We monitor the performance of our children in schools on visitation day. You're doing a little business here. You're monitoring your garden. How are they doing? You're weeding. How then can you choose not to follow where you've kept your hard-earned sweat? Okay, so that should really be the notion to encourage people to say, look, now that I've kept my money in this financial institution, the last time I went there, there was nothing that I did. Many of them, if not all of them, have the, what do you call them, client service, customer service assistants. And for the category of depositors that we primarily target, most of them are word of mouth in terms of information sharing. There is the physical interaction where they walk to the financial institution and ask you. Many of them are not, they don't have access to TikTok, for instance, So they will wait for somebody else to watch the video of TikTok and come and relay this information to them because they don't have access to it. And the problem with relayed information, from 10 words, it becomes 50 with a lot of mix-up in it along the way.
All right. Yeah. Now let's talk about the element of currencies. People have accounts in different currencies. Are these currencies in, for example, dollars, euros, pounds? If my account is in those currencies, does the Deposit Protection Fund cater to those at the time of a bank closing or financial institution? And if so, up to how much do I also get to be protected or insured in that regard, Mr. Ziga?
Well, first of all, we're sovereign states. We have our national currency. So if you had money in an account other than Uganda shillings, whether it is US dollars or any other foreign currency, what we do is we translate that first into Uganda shillings using the exchange rate that was obtaining the day before the closure of the institution. Okay, so if you had your $2,000, we translate that as what the equivalent in Uganda shillings, and then we will still apply the threshold of 10 million. The process goes back to restore factory settings. So then if it was more, when translated, DPF will come in, we give you your 10 million, and then the excess, the liquidator takes care of it.
Okay. We have Basamas who come back home, open up accounts in local banks and go back and find a way to deposit. How do you handle that?
In terms, well, if the financial institution is still running, we sit on the fence and we thank them for growing the economy and bringing issues in terms of money. But at the time when the financial institution closes, first we expect that the information, the KYC documents of that Musama must be with the financial institution, and therefore we have it. So should anything go wrong, unfortunately, then that's the same information that we'll pick up, and the standard rules still apply again in terms of whatever money you brought in as DPF, we do as per our mandate, give you the 10 million, and then the rest follows through with the liquidation.
All right. Speaking of mandate, Dr. Julia, I know that, of course, the Deposit Protection Fund's mandate comes in right at, always activated at the point of closing of a financial contributing institution. However, are there other elements of working with these institutions to minimize such occurrences of closure, for example?
So you're asking about whether we supervise those financial institutions. The way the country has decided to structure the responsibilities is that it's the central bank that does the supervision, and the DPF waits but has information on the performance of the banks. So as we speak now, the Deposit Protection Fund does not go in to supervise and find out the financial performance of a financial institution, but we do go in to check on accuracy of records, depositor records. Are they the right balances? Do we have the customer information there, which might be quite different from the performance of the financial institution in totality. Yeah, so we're avoiding duplication of roles in the country.
Okay. How does the fund handle the case where people say mobile money, they have money on mobile money, or SACCOs also in that regard? How do you handle those particular categories?
So SACCOs are regulated by another ambit of government, Uganda Microfinance Regulatory Authority. So that institution is the one that handles SACCOs. Then when it comes to mobile money is quite unique because there's an arrangement where if a mobile money company was to close, the depositors would actually be paid all their money, because there's an arrangement where the mobile money company keeps money in a bank, and if anything happened, it's that money that will be used to pay the mobile money depositors, because all mobile money is supported by money in a bank. So that money is ring-fenced and it is kept safe. Even if the mobile money company collapses or the bank itself collapses, the mobile money users will get all their money, because that money is ring-fenced. It is not protected by the Deposit Protection Fund, but there's another mechanism to protect them. So those who have money in mobile money should continue with their mobile money arrangements. And those who have money in banks should know that they'll be protected by the Deposit Protection Fund.
This is like something to add to that.
Just on the SACCOs, just to add that, you know, SACCOs, some of them have grown and they have really become massive. And at some point, because of the sheer volume of resources that is within the SACCO, I think it was felt prudent that the key regulator of the sector, which is the central bank, should come in where the volumes have increased. So the very large SACCOs now have been moved to the jurisdiction of the central bank. And as we mentioned, Where we come in is any of these financial institutions that is licensed and regulated by the central bank, the DPF comes in at play. So as we go along, as the transition is made to move the large circles to the central bank, you'll see DPF in that space of those categories that have come under the central bank. Meanwhile, the other arm of government, UMRA, as mentioned, will continue with the others who may not have met the threshold to be able to cross over to the jurisdiction of the central bank.
Okay, all right. Dr. Julia, we would like to then step into the element of talking about the contribution of the Deposit Protection Fund towards socio-economic development and in the area of ensuring that there's financial stability as a country.
So the Deposit Protection Fund creates financial stability by ensuring that you bank with confidence, knowing that even if Bank A has closed, even if my bank is closed, I'll be paid. So we create that confidence, and the financial sector depends a lot on the confidence of the depositors. If we didn't have this deposit protection and a bank was closed and depositors have to wait for the liquidator, you can imagine the depositors will start running to remove their monies from other banks. In the process, you can cause a systemic problem within the financial sector, because banks rely on deposits, banks rely on that confidence. So the major way in which the Deposit Protection Fund contributes to the economy of this country is ensuring financial sector stability, especially in the face of bank closures. People remain, and you can see with the EFC. Uganda was closed. You have not had a lot of people complaining that banks now have withdrawn my money. Why? Because we pay the depositors very fast, and the banking sector has continued operating normally. So that is the major way in which a deposit protection fund contributes to financial sector stability, by building that confidence. And of course, as depositors keep depositing more into the financial sector, then the bankers have a bigger pool of funds that they can use to lend out and finance so many projects, roads, agriculture, and therefore you find that the whole economy then benefits.
Okay.
Yeah.
So if that were, if I may come in, if that were the hard side of the key contribution, there is a subtle side to it as well. You know, every time we're out in the field in our public awareness engagements, we are also in a way disseminating information that opens up the minds of the depositors. There's some literacy going on. We speak our deposit protection and deposit insurance, but packaged in such a manner that it is supposed to actually mobilize the depositors and the citizenry to move towards the formal financial system. I mean, we both know that money is meaningful when it is active. Money sitting somewhere, you are denying the nation from growing, because while you may not have use for it now, somebody else can put it to use, and then you get yours back with something more on top.
All right, my coin bank is going to go to the bank tomorrow instead.
Oh, you have a coin, piggy bank. Where were you planning to take it before we came onto the show?
I'm going to bring it into the economy in December. Okay, now on that note, I know that Dr. Julia had mentioned earlier the procedure of paying back these funds. Below 500,000 Ugandan shillings, it's sent to the depositor via mobile money. Above 500,000 Ugandan shillings, can we have clarity on how that is? Because if I've been having only one account in the closed bank, then how do you get me that money? Then we have Dr. Hab.
Okay, so now that limit will always depend. When the next bank is closed, we can push the limit to 1 million. It just depends on how we perceive the risks within that payment mechanism. Right. So we don't want to say 500,000 will always be through mobile money. That can change. But what we want to tell the depositors that you give us the information, and we'll ensure that we design a mechanism to make sure that you receive your payment and safely.
So the present mechanisms are mobile money and an alternative. Would that be an alternative account?
Yes. So we have the mobile money, and we can pay you using the alternative mobile money account that you've told us, or the alternative mode of payment that you've given us. So when you open your bank account, account, there is a section, what is your alternative mode of payment? So you can say mobile money. You can also say, oh, but I have a an account in Bank C. If this bank is closed, pay me through Bank C. So once we have that information, that is what will help us to be able to pay. Now, it would be good if we have that information, because then we shall just pay you through EFT if you have an account in another bank. We can also pay you through mobile money if it's within the threshold we have determined. But if you didn't give us an alternative bank account and your threshold is higher than what we are willing to accept on mobile money, then we'd send you to the agent bank, which is still very convenient.
Okay.
Yes.
Mr. Zaga, yes. I know that through the experience of the EFC Uganda Limited closing and you repaying back people, by and large it's been a smooth sail. However, I also know that you have encompassed some challenges in there that you'd like to address. Let's speak into those.
Well, the key challenge that we saw was at two levels. One, despite the efforts to get the information out there to the depositors of EFC, to this day there are people who are still receiving the information. And that's why some of them are still trickling in. And I think it is important to, again, re-echo at this stage that the EFC depositors who were going to Stanbic Lugogo branch, where they were being paid for, now need to be informed that we have since closed payment from there, and those residual cases, we're handling them at the DPF now directly, so they don't need to go there. So that became kind of a challenge, and it is still ongoing. Now, the other thing that came was, I mean, a depositor has traveled all the way and has come with some information that is lacking, okay, and maybe has come from quite a distance. So it was mainly largely operational, and I think we didn't experience so much, and that's why you didn't see videos on social media and all the negative publicity, because of the fact that their records were already kept up to date by and large. Up to the point of the closure of the institution, we had most of the current information. So we didn't have too many of the cases of people saying my money is not the one I expect, and so on and so forth. So it was more of an information gap, which we have continued to fill by ensuring that we keep following them through. I mean, we even sent messages, personal messages, to the telephone numbers that we had. Okay. But you may find we're sending a message to the telephone number that Priscilla gave, and Priscilla has since donated that phone to an auntie who doesn't even care less what messages are coming and doesn't pass it on to you. So it was mostly operational. Okay. But at the functional and from the payment side of things, I must say it was largely seamless. Yeah.
Do people need to pay some money in order to get their money?
The straight answer to that is a no.
And a big no with capital letters.
You know, because you might send people out to the field to help you dispense the duties of the deposit protection fund, and then they say, no, but you need to give us 20,000 for administration, for operation, as you've mentioned it. So could we clear that out?
Like I said, it is a big no. The depositor, no depositor is supposed to pay any money to us. Okay. We engage and deal with the financial institutions where they take their money. Okay, so the direct interface in terms of transactions with the DPF, no. And if anybody out there is trying to tell you, we are removing this amount as a DPF fee, that is something you should bring out. Quickly raise the flag and bring it to our attention. Okay. It's not proper.
Speaking of deposit protection fund fees, where does the money come from, Dr. Julia? Who funds the Deposit Protection Fund?
Yes, so the Deposit Protection Fund is funded by the banks or the financial institutions that are regulated and licensed by the Bank of Uganda. So every year they have to give us what we call a premium, an annual premium, and that is computed as a percentage of the deposits that they held over the year, and that percentage is 0.2. So that is where we get our money. So when this money comes in, we have a team of highly experienced financial managers who invest this money in treasury bills and bonds. So that money then grows with the interest that we get from the treasury bills and bonds. So this arrangement has continued for a long time, and all I can assure the depositors is that if your bank is closed, rest assured we shall have the money to be able to pay you. All you have to do is make sure your information is updated with your financial institution.
All right. Well, this conversation is coming to a close, but I know that we have to make some emphasis on some pointers as the Deposit Protection Fund. So I'll start with you, Mr. Ezaga. What is your emphasis and what should people take home with them from this conversation?
I think I'll focus on KYB. The KYC, most depositors have already interfaced with what KYC is, because that is the bank
KYC
speaking.
means
know your customer.
That's on the bank
That's
side.
on the bank side.
Now,
I want
as a
to flip this
customer,
coin. Exactly. I want to flip this coin over and say it takes two to tango. It's a two-way thing. The same way the financial institutions want to know their customer. I want to appeal to the customers and depositors to take interest in also knowing about their financial institutions. And knowing starts with this as simple as asking. Don't fear to ask. When you walk into a financial institution and you see the financial statement there, let it not be something abstract. Feel free, walk to somebody at the bank and say, but what does this mean? Translate it for me in the simplest terms. That to me is the key focus of my message. And as we wrap up, I cannot fail to wish all the viewers out there a very happy festive Easter season. Thank you very much.
Okay. Yeah. All right. We're going to take a short breather and then we're going to be returning shortly. Welcome back. You're still watching the Deposit Protection Fund talk show here on NTV, and of course my name is Priscilla. We've had Mr. Patrick Ezaga with the fund, and also Dr. Julia Olima Oyet, who is the CEO of the fund. I believe that they've done a good job to break down for us as depositors in financial institutions the existence of the fund, the mandate of the fund, and who it gets to protect at the end of the day. And of course, in the unlikely event that your financial institution is closing, how do they come in to save the day, and modes of saving the day and giving you your money, which they can pay you upfront up to 10 million Ugandan shillings. And they've given us the confidence that you can continue serving in different currencies at the end of the day. It's all money, and according to the government of Uganda, it is all protected money. Now, we would like to have the parting shots from Dr. Julia, but emphasis being on the nature of financial institutions, because bank, but you know, financial sector keeps growing, and so there's different elements of contributing institutions to the Bank of Uganda. And also at the end of the day, having encouragement to people to formalize their money, their hard-earned money, so that they can be protected at any given time.
Okay, thank you very much, Priscilla. I think you have covered the parting shot, but I will add on. So the public out there is encouraged to ensure that you deposit with institutions that are regulated. And if you want to benefit from the deposit protection that the DPF gives, you need to bank with an institution that is licensed and regulated by the Bank of Uganda. And there are three categories of institutions. We have the commercial banks, we have the credit institutions, and we have the deposit-taking microfinance institutions. If you bank with any of those, you will be protected. It's also important for you to be able to update your depositor records with your financial institution so that you can get the protection that we give. And just to assure depositors and the public at large that the deposit protection is there to cover your back, and please continue banking with confidence, know your bank, and update your depositor information. Thank you so much for viewing, and I wish you all a lovely Easter weekend.
All right. Well, thank you so much for your input, and I trust that this information has been valuable. At the end of the day, we want you to be an informed depositor so that you can make an informed mind, but emphasis being on move away from answering all those many questions from your bank, your financial institutions. Who are you? Date of birth, next of kin, You do the reverse. Give them an interview and get to know them a little bit better so that you're more confident and you are depositing with confidence. Thank you so much to the Deposit Protection Fund of Uganda for the confidence that they're giving us, that at any one given time, whatever the occurrence is, they will have protected your money and they will be able to give it to you back at the shortest time possible. However, terms and conditions apply. Update that information on a daily basis. I actually had to update with my banker. I wanted to change my mobile money number, and so I had to go through this rigorous procedure of updating it. But at the end of the day, now I know why it is important that I followed up through with that process. Do the same. It's your responsibility. Thank you so much for watching. Good day.